Ghanaian equities appears to have become quite unattractive in spite of the economic growth that we're seeing. If we look at Q2 growth numbers, 33% there, year-on-year growth. Tullow Oil, the largest listed stock, has been pretty much flat since it listed on the bourse. So why the sell-off?
Essentially, I think what is happening in Europe is creating a few problems for us in Ghana. Most managers are not putting in new cash, so the demand side is non-existent. And to be fair, at the beginning of the year, we saw stocks kind of get overvalued quite a bit. So what is happening is we see it just as a correction. It just gets into their right weight, and there's no cause for alarm.
So the market pretty much overheated at the beginning of the year, and you say stocks just coming back in line with the real valuations there. When we look at the financial sector specifically, though, there has been sharp falls in those stocks. Why are those stocks bearing the brunt of the sell-off?
Essentially, when the market in Ghana rises, the financial stocks lead the charge, and therefore when they decline, I expect them to come down. It's basically feeding into the theory of the overvaluation. They always tend to get overvalued first. So once you have everything, once there's a little bit of nervousness, these stocks kind of tumble. But yeah, I think the next quarter or the results that are going to come through this month will be the deciding factor on how the Ghana Stock Exchange will perform by the end of the year. If they are good, we should see some recovery. If they are flat or horrible, then it will decline further.
Standard Chartered has just brought its base rate down to 16.95% from over 20%. It's now got the lowest lending rates in the market. What sparked this move?
Could you say the question again?
Standard Chartered bringing its base lending rate down to the lowest in the market. Why has the bank decided to cut interest rates so dramatically?
Essentially, we've been expecting this for a while. The central bank has reduced its prime rate to about 13, and there has been a lot of pressure, both and a lot of moral suasion on the banks to bring their lending rates down, because you have prime around 13 and the banks are lending around 25. That's a huge spread for the bank. So what Standard Chartered has done, I think Barclays did some time ago, but they stopped at 18. Standard Chartered has brought it to 16.5. We expect this to happen, and I'm sure most analysts will expect them to even cut it further.
With banks' interest margins then being affected by this decline in interest rates, what are banks doing to counteract this? Are they going out and lending more money?
Essentially, because of what is happening in the global economy, I don't think they are bullish on lending as they would be. They are more critical about making loans. But what they're trying to do is to maybe capture in the corporate sector. So, for example, we explained Standard Chartered's steep cut in their rate as one, because they are big on the corporate sector, and the corporates still have their plans intact. So it's more about just reducing your rates and increasing the size or the number of businesses that come through you and take your margins on it.
Now, Bank of Africa has recently entered the Ghanaian market by acquiring a Bank, which is a 2.5% market share. It plans to double this market share in the next few years. Does this represent a challenge to any of the larger banks like Standard Chartered and Barclays?
Well, I don't think so. I don't think they represent the kind of challenge that would unnerve the big banks. But however, Amal Bank for some time now needed to meet that capital requirement, because the deadline for them is fast approaching. So they had to get into some form of capital raising. And I think they decided to go with the Bank of Africa, which is from Mali. We'll see how it plays out, but I don't think they would threaten any of the big boys.
As we enter a new quarter, Winston, and you say we've got those Q3 results coming out, if you are bullish on the Ghanaian Stock Exchange and Ghanaian economy, which stocks are looking undervalued at this point in time and have attractive PEs?
Well, I think PEs generally, even for the financials, they've lost so much that they are attractive. What would matter most is how they performed in the quarter or the year to date, and that.
So, which stocks specifically, Winston? Can you give us an idea of which are the most attractive stocks to invest in at this point?
Well, I think from the financials point of view, you can look at EcoBank Ghana. EcoBank is looking quite pretty. They've had very good results. Standard Chartered, by the presentation they made to brokers, are very bullish, and even though their PE is still above what the average is for banks on the market, I think they are definitely attractive to look at. You have Bank that is raising capital, and they have a very low PE, which makes them very, very attractive for any investor looking at it.
So the banks predominantly. Thanks very much for your time this morning, Winston. Winston Nelson is the CEO of African Alliance Securities.